The Bank of Canada's Indicators of Financial Vulnerability page on their website, which has now been rebranded as Financial Stability Indicators, so a little bit more bullish than bearish, I guess, was updated in December. And I've been meaning to go through it. I honestly just recorded a 40-minute version of this video and I completely nuked the audio. It was totally my fault, which sucks. But I'm gonna go through it. I'm gonna go through it as quickly as possible, which is good. I got the long version, the long-winded version out of my system. Gonna cover a lot of things: loan to value ratios, debt service ratios, house flipping activity, which will probably end up being sort of like the clickbait title and thumbnail that I use for this video because it's falling off a cliff. There's a lot of cool stuff that the Bank of Canada tracks in here, to be honest with you, and a lot of it tells a pretty solid story. So I'm just gonna rip through it as quickly as I can. So Canada's central bank is actually out here tracking house flipping activity like it's a vital sign. And the flipping line is actually falling off of a cliff right now. And that's just the dessert from this report, because buried in the Bank of Canada's financial stability dashboard is a full x-ray of mortgage behavior, how many mortgages are being written, why, what terms people are choosing, how long they're stretching amortizations, how leveraged home buyers are, and whether or not households are quietly cracking. So I'm going to go chart by chart through the whole thing and tell you what the data is actually implying, especially if you're watching 2026 and thinking, are we back? Or maybe not even are we back, but is the worst behind us? Or are we about to find out who's been swimming naked? All of this is from the Bank of Canada's financial stability indicators page. If you just Google Bank of Canada financial stability indicators, they basically publish a big set of data on a regular basis, I think 4 times a year. Basically a big set of indicators to monitor and assess the risks in Canada's financial situation. And I love what this dashboard is. It's actual behavior, mortgages being originated, household leverage, debt service, arrears. The bank updates these indicators quarterly: March, June, September, and December. So it's designed to show how the trend shifts without sort of the daily noise. So let's start with the most like, is the market thawing chart here? And this is the number of mortgages originated, period. Okay. So we have all mortgages here, and we have the number of mortgage originated. You can also do by interest rate and term and amortization period. And the total number is climbing again, and it's not back to mania. It's probably mostly that renewal wall getting pushed through. We're seeing rising originations, but it means that one of two things is happening. Number one would be more transactions are happening again, more buyers qualifying, more sellers accepting reality. We know that's not happening. We just came off the worst year ever. So it's probably because we're seeing more renewals happening and we're getting through that renewal wall. So demand isn't